Hi, this is Chuck Hughes. I would like to welcome you to the Wealth Creation Alliance Let's Get Started program. You are now a member of an exclusive group of like-minded investors on a journey of discovery and wealth creation. As an Alliance member, I think you will learn new wealth-creating ideas that you've never been exposed to before. Some members, I think most, will discover a whole new world of wealth creation. This is the beginning of our journey of learning and sharing knowledge that I'm convinced will lead to great success for our members. The goal of the Let's Get Started DVD is to allow you to quickly grasp the concepts required to understand and implement the Wealth Creation Alliance trading strategies. I'm really excited about sharing my 24 years of trading experience with you, and my goal is to help you duplicate my success. The Wealth Creation Alliance is a 6-step learning process designed to allow you to quickly grasp the wealth creation concepts. I will be guiding you at every step of the process to make sure you gain the full benefits of the Alliance. Step 1 is the Let's Get Started DVD you are now watching. The DVD gives you a broad overview of the wealth creation concepts, and I recommend you view this DVD first. Step 2 is reading the Members Only Guide, which is the Wealth Creation Reference Manual. The manual explains in detail the wealth creation bullish and bearish strategies and how to implement the strategies. Step 3 is using the strategy calculators to perform a profit-loss analysis of a trade before you take the trade. After you learn to implement a strategy, refer to the Trading Toolbox Manual, which gives you detailed instructions on using the calculators. Step 4 is receiving the Springboard emails I will be sending to members that comment on current market conditions and the strategies and techniques I am currently using. Step 5 is participating in the Traders Forum, which allows wealth creation members to share their current experiences and trading ideas with other members. This allows us to brainstorm ideas and techniques that are working with current market conditions. And Step 6 is attending the live seminar that will be an opportunity for all of us to meet face-to-face and to share our latest wealth creation ideas and profit opportunities. And of course, you can call or email with any questions, and my staff and I will be glad to help you. Our only goal is to help you succeed on your wealth creation journey. Now, over the years, I developed simple trend following systems that trade with the trend. When the price trend is up, we buy, and when the price trend is down, we sell short. Now, even though this concept sounds very simple, it really works. I started trading back in 1984, and at the time I had young children and a mortgage, and I could only start with a $4,600 trading account. But in my first 2 years of trading, I made over $460,000 in profits using my simple trend systems. And over the past 24 years, I've made over $4.5 million in actual profits, proving that trend following really does work. These trading profits are documented in the Wealth Creation Members Only Guide with copies of my tax returns and brokerage statements. There is nothing theoretical about this program. All strategies and concepts are verified with over 24 years of actual trading results. One of the great advantages of the Wealth Creation program is that the program provides a diversified portfolio of strategies that can profit during any type of market condition. During bull markets, the stock purchase, call option purchase, call option spread, and buy right strategies are used. During non-trending markets, buy rights, in-the-money call, and put purchases, and in-the-money call and put option spreads work best. And during bear markets, we want to use the put option purchase, put option spreads, and bearish ETFs to profit. So as you can see, we have a full arsenal of trading strategies for any type of market. Now we can further diversify our trading approach by using 3 different trend following strategies depending on our time horizon. The MACD, major trend, and intermediate trend are simple but effective trend following systems that I have been using for many years. MACD is generally used for short-term trades, intermediate-term trend system for intermediate-term trades, and the major trend system for longer-term trades. These 3 trend following systems can be used independently or together. Now the 3 wealth-creating trend following systems help us determine a stock's price trend. The price trend allows us to know in advance the most likely future price movement of a stock. Once we determine the price trend, then we can implement the wealth creation bullish and bearish trading strategies. Let's first take a look at the MACD trend following system. In my experience, MACD is one of the simplest and most reliable trend indicators available. MACD uses moving averages to create a momentum indicator, but the MACD is more of a leading indicator than a moving average crossover, which tends to lag price movement. The MACD can be easily downloaded from Yahoo Finance or stockcharts.com. The Wealth Creation Members Only Guide and Trading Toolbox Manual contain instructions on downloading the MACD. The most popular formula for MACD is the 12 and 26-day MACD. You will see the 12 and 26-day normally as the default for most technical analysis programs. The 12 and 26-day MACD is calculated by subtracting a stock's 26-day exponential moving average from its 12-day exponential moving average. This creates the MACD line. Now the price chart I'm displaying shows the daily price movement for Aetna stock on top, and below is the plot of the Aetna 12 and 26-day MACD line. Now, when you start using MACD, you will notice that a stock's 9-day EMA line is also plotted and is used as a buy-sell trigger. When the MACD line crosses above the 9-day EMA trigger, it indicates positive momentum and higher prices. And when the MACD line crosses below the 9-day EMA trigger, it indicates negative momentum and lower prices. The Aetna price chart that I'm now displaying shows the MACD at the bottom of the chart, which is the thicker black line, and the 9-day trigger line, which is the thinner red line. If you look at the left side of the chart, you can see that the MACD line crossed below the red trigger line, indicating negative momentum and lower prices. We can also see the price of Aetna stock decline sharply after this sell signal. Then in the middle of the price chart, we can see the MACD line crossed above the 9-day trigger line, indicating positive momentum and higher prices. Now also notice that after this buy signal, there were several whipsaw trades when the MACD line crossed above and below the red trigger line. These whipsaw trades resulted in losses. Now the net result was that over this 5-month period, there were a total of 6 MACD buy and sell signals for Aetna stock. 3 of these 6 signals were profitable, and 3 signals resulted in losses. In my experience, I have found that the 12 and 26-day MACD to be too short-term and more prone to whipsaw trades. So what I did was simply double the time frame to 24 and 52 days to make the MACD indicator more longer term and less prone to false signals. The Aetna price chart that I'm displaying now shows the 24 and 52-day MACD line, which is the thicker black line that you can see at the bottom there, and the 18-day EMA trigger, which is the thinner red line. Now I'm displaying the same 5-month period that we just looked at in the previous example. Notice on the left side of the chart we can see that the MACD line crossed below the trigger line, indicating negative momentum and lower prices. Then on the right side of the chart we can see the MACD line crossed above the trigger line, indicating positive momentum and higher prices. So over the same time period, the longer term MACD only had 2 trades, which were both winning trades, compared to the 6 trades for the shorter term MACD. In this example, the longer term MACD produced more profits and less losses. Notice how the MACD sold pretty close to the top of the price movement and then reversed and went long pretty close to the bottom of the price movement. This produced some nice profits and is a good example of why I prefer to use the longer term MACD. Now, one of the advantages of the MACD system compared to a moving average crossover system is that the MACD acts more as a leading indicator and normally will issue a buy or sell signal before the crossover of the moving averages. Most of the time this can result in higher profits and lower losses. The price graph I'm displaying now for Amerisource stock shows the 24 and 52-day EMA lines on the top portion of the price chart and the 24 and 52-day MACD on the bottom part of the price chart. Notice that the MACD issued a sell signal on September 1st at a higher price and ahead of the EMA crossover. And the MACD reversed to a buy signal ahead of the EMA crossover at a considerably lower price. In this example, the MACD sell and buy signals were more profitable than the EMA crossover sell and buy signals. The price charts that I will be displaying shortly are recent MACD trade signals for Northern Trust, Cigna, the Chilean stock SQM, and Shaw Group. Here are the MACD signals for Northern Trust and Cigna. Notice that the MACD system was short for the major part of the down move and then reversed as these stocks bottomed out and was long for the major part of the current up move. Here are the price charts for SQM and Shaw Group. And again, we can see that the MACD has done a great job of selling close to the top and buying back close to the bottom of the price movement. Let's take a look now at the intermediate term trend system, which is a trend following system that allows intermediate term traders to trade with the trend. Trading with the trend is an important requirement for traders with a 3 to 6 month time horizon. Regardless of which trading strategy you use to buy and sell stocks, there is always entry and exit timing risk of buying stocks when prices are high and selling stocks when prices are low. The timing of when you buy and sell becomes more important with short and intermediate term trading. Now, trading with the trend can help reduce this timing risk. If you limit your stock purchases to stocks that are in a price uptrend and sell a stock if it enters a price downtrend, you can eliminate much of this entry and exit timing risk. I like to use moving average crossovers to define the intermediate term price trend. For example, the intermediate term trend system uses the 50-day and 100-day exponential moving average crossover to define a trend. A price uptrend exists when a stock's 50-day exponential moving average is above the 100-day exponential moving average, and the stock should be bought. A price downtrend exists when the 50-day EMA is below the 100-day EMA, and a stock should be sold. This is a simple but effective system for buying stocks when they're in a price uptrend and selling stocks when they're in a price downtrend. The 50 and 100-day EMA lines can be easily downloaded from Yahoo Finance or stockcharts.com. The Wealth Creation Members Only Guide and Trading Toolbox Manual contain instructions on downloading exponential moving averages. Let's take a look now at some actual examples of the EMA trend following system so you can fully understand this important concept. The price chart you are currently viewing displays the daily price movement of Sirius satellite radio stock and its 50-day EMA and 100-day EMA. If you look on the upper left side of the price chart, you can see that the intermediate term trend system issued a sell signal for Sirius stock when its 50-day EMA, which is the red line, crossed below the 100-day EMA, which is the green line, at around the 640 price level. If you are an intermediate term trader, you would want to sell your Sirius stock at this point, as there is no way to predict how long this price downtrend will last and how far the price of Sirius stock will drop. Trend traders would not want to buy Sirius stock until the price trend reverses, as indicated by the 50-day EMA crossing above the 100-day EMA. Sirius is currently trading at the 345 level and is still on a sell signal, as indicated by its 50-day EMA line remaining below the 100-day EMA. Now, selling when the EMA system issued a sell signal prevented a 46% loss at current price levels. Traders who ignored this sell signal would now need an 85% increase in Sirius stock from 345 to 640 just to get back to the price level that the sell signal was issued. This demonstrates the importance of trading with the trend and limiting your losses if you're an intermediate term trader. Traders who were tempted to buy Sirius stock at the $5 or $6 level because the stock was cheap would have incurred large losses at current price levels as a result of trying to predict when the price of Sirius stock would bottom out and start a price uptrend. Now, here is another example of the EMA crossover system for Coach stock. The Coach 50-day EMA is the red line and the 100-day EMA is the green line. Now, if you look at on the left side of the chart, you can see that the Coach 50-day EMA crossed below the 100-day EMA, indicating the intermediate term trend has turned negative and Coach stock should be sold. Coach stock should not be purchased until there's a reversal buy signal, as we really don't know how long the price decline will last. In the middle of the chart, we can see that there was a reversal buy signal indicated by the 50-day EMA crossing above the 100-day EMA, and Coach stock should be bought again. I find the intermediate term trend system to be very helpful in that it gives us an instant picture of a stock's price trend, and we know immediately if a stock should be bought or sold. The intermediate term trend system is a rule-based system with clearly defined buy and sell rules. This enabled me to do historical testing with the help of the Omega Research TradeStation program using the buy and sell rules of the 50 and 100 day EMA crossover system. Now you're looking at the historical test results for a well-diversified sampling of both growth and value stocks that represent a broad cross-section of 26 different industry groups. This sampling includes small, mid, and large cap stocks. The historical profit results were generated over a 24-year period from 1982, or when a stock first traded, to 2006. Historical profit results are based on buying 100 shares of a stock for each EMA buy signal, compounding the results, and do not include commissions. Let's look at the summary of the profit results at the bottom of the table. The initial cost to purchase 100 shares in each stock was $8,204. Now the total profits generated were over $210,000. This resulted in a 2,567% total return on the $8,200 initial investment over the 24-year period. The 2,567% total return over the 24-year test period results in an average yearly return of 107%. This enables us to double our initial investment every year on average. This average 107% annual return, remember, was achieved without the use of leverage or margin. These historical profit results demonstrate that the intermediate term trend system has the ability to produce impressive profits with very low risk. Of the trades that were losing trades, the average loss over the 24-year test period was only $150. Now when you compare this to the total profits of over $210,000, it demonstrates the ability of the system to keep losses to a minimum. The average profit-to-loss ratio was a very healthy 12.7 to 1, with over $12 of profit for each $1 of loss. Again, this demonstrates a very healthy risk-adjusted return. Now, I think these profit results demonstrate the importance of trading with the trend if you have a 3 to 6 month time horizon. The intermediate term trend system allows us to know in advance the most likely future price movement of a stock and reduces entry and exit timing risk. It is a versatile, effective method for profiting in any type of market. Keep in mind that there were 4 bear markets during this test period. The system keeps losses to a minimum and almost always exits a trade before a big loss occurs. In my experience, following a discipline that keeps your losses to a minimum is one of the most important characteristics of a successful trading program. Let's now take a look at the major trend system, which is the last of our 3 trend following systems that we will examine. The major trend system works well for traders with a longer term time horizon of 6 to 12 months or even longer. Like the intermediate and MACD systems, the major trend is a trend following system that identifies the major trend. The major trend system is longer term and it has fewer trade signals than the MACD and intermediate term trend systems. Because it is longer term, the major trend system has fewer false or whipsaw trades than shorter term trend systems. Trading with the major trend is a more reliable approach than trying to guess the future price movement of a stock. In my experience, the 1-month price of a stock in relation to its 20-month exponential moving average is an excellent way to identify the major trend of a stock. Identifying the major trend allows us to determine the most likely future price movement of a stock. If the shorter-term 1-month price of a stock is above the longer-term 20-month exponential moving average, a bullish major trend is indicated. And if the 1-month price is below the 20-month EMA, a bearish major trend is indicated. This simple system has been very effective in correctly identifying major bullish and bearish price trends. Now, the 1-month and 20-month EMA can be easily downloaded from stockcharts.com. The Wealth Creation Members Only Guide and the Trading Toolbox Manual contain instructions on downloading the 1-month price and the 20-month EMA. Following a system of buying stocks in a major price uptrend and selling stocks in a major price downtrend can help you become a successful trader. Selling a stock when the 1-month price crosses below the 20-month EMA enables you to lock in profits if your trade is profitable and limit your losses if the trade was unprofitable. Now, the reverse is also true. When the 1-month price crosses above the 20-month EMA, you can lock in profits if your short trade is profitable and limit your losses if the trade was unprofitable. Trading with the major trend system helps traders practice prudent money management, which is important for your overall trading success. So the goal of the major trend system is to determine whether a stock is in a price uptrend or price downtrend. This has to be established before you buy a stock or take a short position in a stock. If we can quantify the price movement of a stock, we can determine the major price trend. Now, many times the major price trend continues in the same direction and can persist much longer than you might expect. This monthly price chart that we're looking at depicts the current S&P 500 index 1-month price and 20-month EMA. Now, back in December of 2007, the 1-month price crossed below the 20-month EMA, triggering a major trend system sell signal. This sell signal indicated that the most likely future price movement for the S&P 500 index is down and short positions should be established. The system is still short and the S&P 500 index has declined 47% since this sell signal was issued. Now, very few market analysts predicted such a sharp and persistent decline in the index. The financial media was calling for a bottom all the way down, but traders monitoring the 1-month and 20-month EMA price graph could clearly see that the index was in a major price downtrend and only short positions should be considered. The major price trend sell signal is a good example of how important it is to let the price of the stock determine when you should buy and sell instead of trying to predict the future price movement of a stock or an index. Now let's take a look at some examples of major trend system trade signals. The first example we are looking at is for Monsanto stock. In the lower left corner of the price chart, we can see that the 1-month price crossed above the 20-month EMA when Monsanto was trading at the $11 level, indicating a major price uptrend. Then in the upper right-hand corner, we can see that the 1-month price crossed below the 20-month EMA at the $93 price level, indicating a major price downtrend, and short positions should be taken for Monsanto. This produced more than a 700% return for the long trade, and there is currently an open trade profit on the short side. And again, this is a good example of how the major trend system forced us to lock in profits from the long trade when the system reversed to a sell signal. And this price chart for Petrobras shows a similar price pattern. There was a major trend system buy signal at the $3 price level when the 1-month price crossed above the 20-month EMA, indicating a major price uptrend. And there was a sell signal at the $45 level when the 1-month price crossed below the 20-month EMA, indicating a major price downtrend. The major trend system allowed us to lock in a 1,400% profit for the long trade when the system reversed to a sell signal. And there is currently an open trade profit for this short trade. The major trend system is a rule-based system which allows us to eliminate emotional decision making. This can decrease risk and stress and gives us the tools necessary to become successful traders. The major trend 1-month, 20-month EMA system has clearly defined buy and sell rules which allow for historical profit testing. I conducted 10 years of historical profit testing on a widely diversified portfolio of 8 stocks in a broad cross-section of industries shown here. Historical profit results are based on buying stocks when the 1-month price crosses above the 20-month EMA and shorting stocks when the 1-month price crosses below the 20-month EMA. The historical profit results shown here are based on an initial investment of $10,000 divided equally among the 8 stocks from December of 1998, or when a stock first traded, through December of 2008, compounding the results and do not include commissions. The historical results do not reflect the use of leverage or margin. So you can see that the major trend system produced impressive profits with very low risk. A $10,000 investment in December of 1998 produced more than a $608,000 profit, which equates to a 6,083% return on the initial $10,000 investment. Over the 10-year test period, this translates to a 608% average annual return. Now, this is an excellent return for a system that does not use leverage or margin. 94% of the trades were profitable, and all 10 years over the test period were profitable. The system produced $609,000 in total profits and only $688 in total losses. Dividing the total profits by the total losses results in a profit-to-loss ratio of 885 to 1, with $885 of profit for each $1 of loss. The profit-to-loss ratio is a good measure of risk, and a high profit-to-loss ratio indicates that the major trend system keeps losses to a minimum by exiting losing trades before they develop into a large loss. The largest losing trade over the 10-year test period was a 1.9% loss. Now, the major trend system almost always exits a trade before a big loss occurs and provides you with a systematic trading approach necessary to become a successful trader. Keep in mind that 2 severe bear markets occurred during this test period. These profit results demonstrate that the major trend system is a versatile, effective method for profiting from long or short trades in any type of market. Most investment programs recommend diversifying your portfolio across different industry groups. One of the great advantages of the major trend system is that it allows you to further diversify your portfolio by taking both long and short trades This increases the diversity and profit opportunities of the system. Let's now take a look at individual stock profit results. We're looking at a 10-year profit result for Apple. An initial $10,000 investment in Apple using the major trend system produced more than $930,000 of profit. And you can see the average annual return over the 10-year test period was 933%, and there were no losing trades. And here are the profit results for Foster Wheeler, a major infrastructure company. A $10,000 investment in Foster Wheeler using the major trend system produced a $391,000 profit and a 391% average annual return over the 10-year test period. And again, there were no losing trades. Regardless of which indicator or methodology you use to trade, the major trend system can be a valuable trading tool for virtually any market. Before I take a long-term trade, I normally will check to make sure that I'm trading in the direction of the major trend. Trading in the direction of the major trend helps prevent whipsaw trades, which can increase profits and reduce risk. The major trend system has been profitable across a wide range of markets, including energy, fixed income, commodities, and currencies. I conducted historical testing using exchange-traded funds on a diversified portfolio of 8 global markets listed here, including crude oil, the euro currency, bonds, and equities. The major trend system historical profit results being displayed are based on an initial investment of $10,000 divided equally among the 8 global markets just presented. Tests were conducted from 1995 or ETF inception through September 2008. As in our previous historical testing, results do not reflect the use of leverage or margin. Now, these historical profit results reveal that the major trend system is universal in nature and has been very profitable across a wide range of global markets. A $10,000 investment in 1995 produced a $111,000 profit. This equates to a 1,110% return on the initial $10,000 investment. Over the almost 14-year test period, this translates to an 80% average annual return. This is a great annual return for a system that does not use leverage or margin. 81% of the trades were profitable, and all test years were profitable. Now, over the 14-year test period, the major trend system produced $113,000 in total profits and only $2,500 in total losses. Dividing the total profits by the total losses results in a profit-to-loss ratio of 45-to-1. This translates to more than $45 of profit for each $1 of loss. As noted previously, the major trend system almost always exits a trade before a big loss occurs and can provide you with a systematic money management approach that can help you become a successful trader. These profit results demonstrate that the major trend system is a very versatile method for profiting from long or short trades in virtually any global market. There were 2 severe global bear markets during this historical test period, so the major trend system has proven to be very effective in profiting from both long and short trades in any type of market. The ability to take short trades dramatically increases the profit potential of a system and reduces risk. Okay, now that we've covered the 3 wealth creation trend following systems, we can determine if a stock is in a price uptrend or price downtrend. Once we determine a stock's price trend, we can implement the wealth creation bullish or bearish trading strategies, which we will cover next.